Hello and welcome to our latest edition, and I'm delighted today to be talking to Susan Allen, the CEO of Yorkshire Building Society, and Jeremy Duncombe, who is Managing Director of Accord Mortgages. Thank you and welcome.
Good to be here.
Great to talk to you. We want to talk about YBS, the wider group, Accord, your view of the markets, your role in the market. So we sort of cover a number of topics as we go through. And I've got a few questions for yourself, Susan, as we've got you of the wider bit is, how do you see Accord fitting within Yorkshire Building Society?
Well, that's a great question. Can I start a little bit with Yorkshire Building Society and then we kind of come to Accord? So actually this week we've just had our AGM, and as somebody who joined the sector from banks into building societies, the AGM is one point in the year that reminds me why we're different. Because actually we're owned by all of our members, and some of our members came to join us in Leeds just this week, and more members joined us online. And they can ask questions about the business, about our strategy and about the areas we're focusing on. So it's been really fantastic week for us. Yorkshire Building Society has been around for 160 years, and we focus in just a few real important areas to help people to find a place to call home and to help people to save and build financial resilience. And those two things have driven us from when we started in a building in Huddersfield with about 4 people in the room, right through to the organisation we are today, which is a really significant part of the mortgage and savings industry in the UK. We're really proud of the progress we've made, and we're really proud of the fact that we keep focusing on how we make a difference and how we make an impact in people's lives. And Accord is one of the most amazing ways in which that comes to life. So Accord is our intermediary arm of Yorkshire Building Society. We do some direct mortgages, but it's relatively limited. And of course, in the market today, we all know the value of advice, and so hence connecting with brokers is a really important part of bringing our proposition through to customers. So Accord helps us to make sure we live that promise that we made, or that intention we set out 160 years ago, to help people to find a place to call home. And it's just such a significant part of the business.
So it is integral to the success of the wider society then?
We are mortgages and savings. We do some other little bits at the edges, but we're mortgages and savings, and Accord helps us to bring that promise to life.
And sort of being part of a mutual, what does that actually mean, and sort of why does it matter?
I think it's really interesting. I would say it matters on a few levels. First of all, for the UK financial services sector, what you want to have, like in any other part of the way you run business, you want some diversity. So it's fantastic to have big banks, it's fantastic to have challenger banks, but it's also fantastic to have building societies and indeed credit unions. So I think that blend makes sure that we're giving UK consumers choice. Now, we'll all choose different places to focus. For us as a building society, we think a lot about what we call the underserved part of the market. But again, if you go back to our heritage, helping people to find a place to call home. So it's very natural for us to think particularly about first-time buyers. How can we help people get on the housing ladder? How can we help people who've had some difficult circumstances, who've maybe had a bit of a blip in their credit record, who've got some unusual circumstances, maybe they've had other issues in their lives that have impacted their finances. We think we can play a real role there, and that's absolutely at the core of what we do. So we're really focusing on what makes a difference for members and customers. And I think that is, you asked what's the difference between us and other types of businesses. I think all businesses will talk about how they focus on what they're doing for their customers. But in a shareholder-owned business, you've got lots of different stakeholders you think about. And one stakeholder will be the regulator, another stakeholder will be your colleagues, another stakeholder will be your shareholders, another stakeholder will be your customer. For us, our shareholders are our customers because they are the people who own us. Our members own the society. So our emphasis on how we make sure we deliver for real people is, I think, stronger than you find in a shareholder-owned business in general, which is not to say they don't focus on customers, but I think we can bring more emphasis. And we talk about wanting to help support our members with real help for real life. And I see that run through everything we do every day.
I get that. That's brilliant. And you got the buy-in. Because Accord does a lot of buy-to-let, so how does that fit into that ethos of home ownership?
Yeah,
when it's one step away, maybe?
It's a great question, and in fact, different building societies have taken a different approach on this. So some building societies will feel that they actually don't want to support the buy-to-let sector. For us, the perspective that Jeremy and I take is that everybody deserves the right to have a decent home. and it's not always feasible for people to buy a home. So our belief is that actually everyone deserves the right to a good home, and so we should encourage and support a really good, healthy buy-to-let sector. But we are very conscious of the need to make sure that those properties are a good quality for people to live in. So we do apply the decent home standards to our lending. So we believe that it's important to have a place to live. It's important for that to be a decent place to live, and we are very happy to support buy-to-let, and it's a key part of our business, but with the proviso that it has to be decent buy-to-let.
Okay, I get that. That's great. And Jeremy, if we move into the wider market and your views on it, most people go, what are the opportunity and threats in the market? I like to go, what are the opportunities and the opportunities in the market, because they're one and the same thing, aren't they? Where do you see those challenges, that we say?
Well, let's start with the opportunities. I mean, I think that the market is hugely resilient, and that's one thing we've seen, having in this industry a long time, but in the last 4 or 5, 6 years, there have been so many things that potentially could have knocked the market, and it hasn't. It's continued to be strong. The demand has continued to be strong, and I think that's the one thing about the industry. It is so resilient. Underpinning all of that, I think the biggest opportunity is that there is a demand for housing, whether that is rental accommodation, whether that is owner-occupied. People want to buy and live in homes, and I think that supply-demand issue that we've got in the UK continues to drive the opportunities. The challenge that comes with that is you've got to try and balance the house prices. If you create too much demand and not enough supply, you see house prices go up, and that affects things like affordability and people's ability to get into that property. And I think there's two major challenges that we have. One is affordability, and one is deposit. And whether it's a first-time buyer getting on the ladder, whether it's somebody moving, even if it's somebody downsizing. One of the challenges we've got at the other end of the market, which also affects supply, is that we've got a lot of people in homes at the other end of the market who would like to downsize but can't. They can't find the right property. There's a huge cost involved in downsizing with that stamp duty. So there's a lot of challenges to get the right number of properties onto the market. So the opportunity is fixing that. Is how do we fix that? And a lot of the work we've done as Accord in particular is to try and pick up those two big challenges, one on affordability, one on deposit, because they're things we can fix. We can influence, we can lobby. We've got our papers that we try and lobby the decision makers to try and build more correct homes in the right places. But we can do stuff on affordability. I'm delighted to say we just made some very recent changes on our affordability model to allow people to borrow up to about £35,000 more than they could last week. So that's a brilliant thing that we can do to improve affordability. And deposit, we've brought our 5k deposit mortgage out, which helps with the other sector of the market. So there are challenges, but we're trying to fix where the opportunities that we can get involved in.
I think the affordability one's quite interesting, because it'll be interesting to see whether people will take that extra 35,000, or maybe they'll not go for a 35 year mortgage and go back to what we call a traditional 25 mortgage and just take what they can now, but look at the long term.
And I think that's another opportunity. People don't choose to have a 40-year mortgage. No. They have a 40-year mortgage because it's the way they can afford to get into the house they want to live in. And so, if we can find a way to reduce people's need to have a 40-year term, then fantastic. Long term, that will save them money. It's another way of fixing some of those opportunities. And
the other bit that obviously everybody focuses on when they're looking to buy a house is the cost of the mortgage, and we sort of starting to see a 3 in front of things at the moment. Whether that's a long-term trend or tactical, because we're starting to hear lenders talk about squeeze margins again. But it'd be interesting, where do you see the market going in prices and the speed of it, I suppose?
So I think one of 3 things will happen. Prices will go up, prices will come down, or they'll stay the same. And I can guarantee you one of those things will happen.
Probably all 3 at different times, to be fair.
And that's where my crystal ball goes. So it's a big question. It's a question that everybody gets asked. What's happening to interest rates? Whether you're talking to friends or family or clients, the big thing is they want to know what's happening to interest rate. The honest answer is, I haven't got a clue. And even our chief economist will say he doesn't really. We can know where the market is forecast to go, and we can use that as a guide. But anybody who tries to predict interest rates is probably going to get it wrong. So let's start by focusing on what we can control, and that is trying to get people into homes by making things affordable and the prices the best place we can. And then I think it's advising clients not to wait to try and guess the market, because if you try and guess the market, you might be lucky, rates might come down and you've hung on, but what's happening in that period of time is the house price has probably gone up because there is less supply around people, there is more demand. So I think making things affordable is the most important thing. Yes, we're seeing at the moment, we're seeing a reducing interest rate margin, theoretically, but we felt that 12 months ago and rates went up. So the big influence is what's happening in the wider economy, what's happening in the global economy, things we just can't control. The forecasts are that rates will gradually start to come down. However, most of that is already priced in, and swap rates, which drive fixed rate pricing, are assuming that there will be a drop in interest rates over the next 12 to 18 months, 24 months, and even 5 years. But most of that is baked into the pricing you're seeing today. So if you're expecting rates to drop by 1% from 3.8, 3.9, it's very unlikely that's going to happen. I think where we sit at the moment is assuming that rates will drop. There is a chance that fixed rates could go up if there is market turmoil again, if inflation races away, if we start to see economies thrive again, you could see that inflationary pressure push rates up. So let's make it affordable, let's try and get people into homes, let's not try and second guess where the market's going.
I think that's a great point though, isn't it? Don't try and guess the market, because you're right, you don't know until afterwards. And what have you missed in the interim? You might have lost the house of your dreams.
Exactly.
Yeah, exactly. I mean, I used to advise companies on currency and interest rate markets and buying, and that was the advice you'd always give, because you're never going to call it right. And I think the other thing I would add to what Jeremy said is that we can expect, with all that's happening externally, all of the geopolitical landscape, that we're going to see quite a lot of volatility. We're seeing quite a lot of shifts intra-week, intra-day sometimes. And so I think it comes back to the fundamentals of people trying to find a home, making sure they're getting the right house for them, they're getting the right good advice, and that they understand what they can afford, and then working from there. And really, as you say, Jeremy, control what you can control.
Yeah, and I think you mentioned looking at the solutions, Jeremy. So we've had the stamp duty change nearly a month ago now, and I think a lot of people were surprised at the spike, because I think a lot of people first-time buyers weren't buying new builds, so therefore it was first-time movers were also moving. So I think it was good for the market. But where do you think we've landed on that stamp duty, and what do you think you as lenders could do to help mitigate that change?
So I think the good thing is we didn't see a major issue with people pulling out of homes or not completing on homes. Yes, there was a rush, and it certainly brought completions forward. So we had a really good completion quarter, because people were probably completing earlier than they would have done. But what we have seen is the market still remain robust. When you look at the CACI data, the market is still strong, and there's still demand out there. So I think that's positive. Stamp duty changes always drive a behaviour, and I think we need to get to the point where we're not having these cliff edge scenarios. We need to know where stamp duty is. We need to revise it, probably. That's one for another day. But in terms of the impact on the market, what it just means, it's another cost, particularly for first time buyers. So if they were assuming it was going to cost them X, it's now costing X plus £6,000, and so they have to adapt. So either they look at a different property, they renegotiate the price, and we have seen a number of renegotiations happening. But from a lender perspective, one thing we did do is we brought in a high cashback product to react to that particular group of people who are finding their costs increase significantly. So we brought a product out which has up to £6,250 cash back. Again, just to help people who are committed to that property and don't want to pull out. There is a product there that can help them. And then again, it's just making sure that we have the right products for first-time buyers. We have the 5k deposit, which allows them to get onto the housing ladder early. And I think that's a really important product going forward that you mentioned earlier about getting on the housing market and not missing the opportunity. We found that the 5k deposit could save people between 5 and 6 years of saving up a deposit, during which time house prices may have gone up 20, 30, 40%. So they're paying a little bit higher on the rate, but they're saving potentially a 20%, 30% house price increase. So it's getting on the housing ladder, affording it, and they're the types of things that we can do as lenders.
And the affordability is always key. It's probably been mentioned in about 4 of the answers at least by now. And it's interesting that the government wants growth, and it went to regulators of all different trade bodies to ask for that. How do you, Susan, think that us as an industry, the regulated lenders, should be doing to make housing more affordable?
I think there's a huge amount. We actually did a report last year which we shared at Parliament to try and provoke some discussion about how we all need to come together. I mean, I think it's quite a broad topic, including, as Jeremy's already alluded to, we really need to look at the types of properties that are being built, because I think there are some things that could be done, as you said, Jeremy, to unlock the housing market at the top end that would flow through and create some more capacity for in others properties earlier on in people's life stages. So there's quite a lot that could be done. We're also talking to the regulator quite actively across the sector on some of the constraints that we have that we think were very sensible at a point in time, but they don't really reflect the way the market's changing now. So things like the LTI limits as an example. We're also looking at the proportion of longer term loans, because I think there's a real distinction, and we have this discussion, there's a real distinction between a loan that going into retirement when somebody is close to retirement, and a loan that runs into retirement when the borrower is 25, 30 and trying to get their first time mortgage. So some of these things are the areas we're in discussion with regulators about. So how do we unlock and create the potential? Because we feel very confident in Accord and in our underwriting capability that we know that we have a fantastic team of people. In fact, it's one of the things that makes our proposition so special, is having real people examining the cases, and your brokers will know that they can actually get to speak to our underwriters. Those underwriters can look at individual circumstances. So it is not in our interest to lend people money that they can't afford to repay. Our lending has to be responsible, but that there are things like the LTI, like the lending into retirement, that we think we could safely push, because we have all of the controls and all of the information to make sure that we are only doing lending responsibly.
Yeah, I think that lending into retirement, it always comes back, all these nuances come back to advice is the best thing, but at the moment, the average age of first-time buyers is about 35. If they're taking a 35-year mortgage, their first mortgage takes them into retirement, whereas historically you were probably aged 25 and you took a 25-year mortgage. So it's quite a dynamic shift in thinking from a credit risk point of view and an advisor of how you talk to a client about
and that's
that.
right, from a regulator point of view. So it's going back to earlier comments, nobody chooses to take a 40-year mortgage. They choose a mortgage because it's what they can afford, and if you are being prescribed what you can afford as opposed to the reality of what you physically can afford, then that's driving into behaviours that you may not want to take. So I think reviewing those sort of things, the LTI caps, the amount lenders can lend, we're still going to be prudent. That's the underlying position that we want to take as lenders. We need to be prudent. We need to make sure that we're taking decisions where people can repay, but allowing us a little bit more flexibility to use our common sense approach and use the knowledge that we have to get people into homes.
So we're roughly at the end of April now because the sun's out. It probably won't be when this is issued.
It's always out in Leeds.
If you were doing a scorecard of where we were at the end of month 4 from UK issues, world issues that affect the mortgage market, what would be the ones that probably keep you awake a bit more?
There's been so much going on over the last 5 years in particular, that every time we think of an issue, it becomes 100% of our focus. So you could say COVID was the one thing, and then we got through that, and then there's been wars and tariffs and elections and all sorts of things going on. I think there are bits that we can control in the UK, but a lot of the challenges come from just global economic pictures, whether it's interest rates driven by, we saw initially supply chains, we saw war in Ukraine and Russia, we saw the Middle East situation, we've seen what's happening in the US. All of those affect pricing, and we have to react to that. The stuff that I think gets closer to home has always been a problem is supply and demand. And that's something that as a UK PLC we probably have the most control over. And it's great to see whichever political party committing to build 1.5 or 1.6 million houses. That's great, but we need to see that actually come to fruition. And then I think that really does help us with supply and demand. If not, you end up still with the same demand. We're a growing population. We need more homes, and if not, house prices just go up. So I think that's the bit at home, which is has always worried me. It's worried me for the last 20 years. If we're not building enough homes, and things are getting more expensive and less affordable. And if you go back to when I bought my first home, I was only 19, and I bought a house which cost me £32,000, and I got a 95% mortgage on a salary which was much lower than it is today, but it worked. It worked on 3 times salary, borrowing 95%, and I bought a house that I could afford at the age of 19. That's just not possible now. So how do we, as a UK PLC, get to the point where we can make housing more affordable? Lenders can play a part in that, but a lot of that has to come from government. So to answer your question, long way around, probably 50% of what impacts us comes from the global economy. We can't do much about it. We have to react. There is stuff in the UK that we can affect, whether that's government or lenders.
Okay. Changing tack into a different product, probably a simple question but a complex answer. Renters' rights bill, good or bad for the industry?
Intention good, potential unintended consequences bad. So I think it's we all want renters to have the rights to be in that property, not to be booted out for no reason, not to have rent hiked for no reason. So you want people, as Susan said earlier, to have a really good rental home with good landlords and a reputable industry. You need the private rental sector. We absolutely need the private rental sector, and that needs to be as strong and as good as it can be. We've done research that says the vast majority of landlords are good people trying to do the right thing and not trying to put rents up when they don't have to. And I think that's the potential, as much as it's good intent, the potential downside of the unintended consequences is that this all brings additional cost, particularly to the private rental sector, and that gets passed on to the customer. So yeah, that's what I mean, good intent. Let's just make sure that through the lobbying that the trade bodies are doing, that we get the renters' rights bill into the right place where it is balanced, and that would be my ask. It's good intent. Let's get the delivery right.
And you touched on that there of people need their home, and you talked earlier, Susan, of what mutuality is and getting people into home underserved. What steps are Yorkshire then taking to help and develop getting the underserved people into homes?
Well, I think we touched on one area already, which is helping people to get that first step on the housing ladder. And what I'd say is that the way we approached that was we actually went out and talked to lots of people who were potential first-time buyers, and we asked them what was it that got in the way, and what they really all said was the biggest issue for them was a deposit. So then we used that information to say, okay, so what can we do, as Jeremy said, what's in our control to solve that problem for them, or to solve that for some people, because not everybody will be able to afford a mortgage, even with some support from us. So we had to think about, well, what's actually realistic for us to do to help make it easier for a chunk of people to get onto the housing ladder, and that led to the 5k deposit mortgage. As the way we'll approach all of our product proposition development is we will listen to customers, we will try and understand where are people struggling, what will make a difference. So today that is the main area in terms of underserved customers, but there are also, we're talking about customers who've had, I touched on earlier, maybe something go wrong, they've had a bereavement, they lost a job, they've been ill. So how do we help those people who perhaps their credit history has suffered and now they need some help? And things like our Cascade score, our proposition also helps. We're also very thoughtful about intergenerational transfer of wealth, and there are lots of people who do want to help, who are in fortunate positions to be able to try and help their children, but perhaps they want to do that in a measured way. So the joint borrower sole proprietor proposition, really important. I don't think it's, by the way, the snappiest name, so I think we've got a bit to do to actually help them translate that, and I'm sure that the brokers do a fantastic job in explaining this. But I think we have to keep thinking about how can we make it possible, and what are the things that get in the way. And so don't have all the answers today, but that is what guides us, what would make a difference. And by the way, I would also say that the broker community are a huge source of insight to us as well. Really helps us when we get feedback saying, actually, we've got these cases, but you're not turning these down. We think this actually is important. And we have over the last year made a number of changes to our propositions based on feedback from brokers. I mean, the one I know was raised with me personally was an issue to do with how we were looking at overseas candidates. And Jeremy, you drove through some changes to make sure that we could do more to support more people in that space. So I would say that feedback is really welcome to help us to make sure we're really understanding what the current challenges facing people in the housing market.
Excellent. And Jeremy, Accord has transformed massively over the last 4 or 5 years from probably what it was to what it is, both in service, product design and where it works. What are the top priorities this year for Accord?
So I think first of all, to make sure people remember that. It's great having evolved our proposition over the last, probably longer than that, 6-7 years. And I think one thing we really benefit from is that consistency. We've been doing this now for a long time. And with that is lots of positives, because people recognise you as being flexible, having a common sense approach, having a great sales team, being able to talk to underwriters. The downside of that is that they just get used to it and it becomes the norm. So I think one of the things we've got to keep doing is telling people about it, because it is actually really, really brilliant, and we take it for granted. So I think part of the challenge is just keep reminding people what we do, how we do it, that it is consistent. We can be trusted to do this, and we've been doing it for the last 5 years, and then evolve it. So we can't stand still, because we know that if we stand still, people will try and catch us up. So we have to keep pushing forward. So whether that is new propositions, whether that's adding to our range with innovative products like we've talked about already, adding more to our range, which I can't talk about today, but there will be things coming as we progress forward. But also making sure that we also support the education of brokers, because the more a broker can improve in their roles, the better. So we've got our growth series, which is an educational library of content, which I know you've been featured in before, but that's really trying to help brokers improve the way they do business. So whether that's podcasts on the economy, so that brokers can really understand the market. Our chief economist is on there on a regular basis, talking about the types of things we've had conversations about today. Whether it's about how you develop your contact strategy, whether it's how you drive more leads, whether it's about mental health or DE&I initiatives, there's all sorts of stuff on the growth series, which is free of charge, which gives people access into just being better at their role. So I think that's part of our job as well. But just keep developing what we're doing and don't stand still, because if you stand still, you're moving backwards.
The growth series is great, and you're right, I've been on a few. Where people find it?
On our website, so you can either go on and just search Growth Series, Accord Growth Series in Google, and it'll come up. But on our main Accord website, it's there right in front of you. There's a little tab at the top that says Growth Series. It's really easy to search as well. So we've done a lot of work on our website recently to make it more intuitive and to make it more searchable. That applies for criteria as well. So if you go in and you want to know affordability criteria, just go in and search that. As soon as you go into Growth Series, if you want something on economy, again, just type that in. It's really intuitive. It'll return a set of responses. So podcasts, we'll see the Mortgage Mentor podcast, which you'll be starring in as well, those sort of things. So yeah, there's some great content on there, really easily searchable via our website.
Excellent. And so we've talked a bit about Yorkshire and its desire, what Accord's trying to do, where the market is. I suppose key to all of that, as you alluded to, most of your mortgages come from brokers, the intermediary channel. So where do you see their challenges for the next sort of 12, 18 months?
So I think there's some great, let's go back to your original point on opportunities.
Yeah.
So I think the opportunity for brokers is that the market is so erratic, there's so much going on, there's so much volatility in the market, and because of that, people need advice more than ever before. So I think the biggest opportunity for brokers is they are needed more than ever. and there is more and more demand and more complex stories, and therefore more customers will be coming and talking to brokers. You know, you look at the last 4 years, somebody who's been through COVID, whose income patterns have changed, needs a lender to look at the last 12 months rather than an average of the last 3. Where do you start as a customer with that, as a client? You talk to a broker, and the broker advises the best route for you. So I think that's the biggest thing. Be confident in the opportunity that's out there. There's been talk for as long as I've known about people coming in and taking over from the intermediary, whether it's robots or lenders or whatever it is. And I think as long as the broker is confident in what they're doing and has a great contact strategy with their client base, the client knows the value of that broker, then the opportunities are there, and I think then you can be strong and counteract whatever challenges come along the way.
And I suppose, how do we help them? So us as distributors have a duty, and we do lots of things, but I think it's just as important for lenders as well to help brokers, not just to say, well, here's our criteria, why aren't you giving us business, but to help them understand business. Apart from the growth series, which is great, are there other things around the edges there that Accord do?
Yes, so I mean, our sales team is out there. We've got a field-based and telephone-based and internal telephony team, all of whom know our criteria back to front. So, you know, I think the biggest thing is speak to our underwriters, because the underwriters will give you access to every case. So if you have something you say, I'm not sure about this, just pick up the phone, drop us come through on web chat. It's the same people on web chat than it is on the phone, so you get consistency of decision. So whether you come through that way, there's a load of self-serve stuff on the website, and then once the case is in, talk to your underwriter. I've got this case, what do you need? What should I send with it? Pre-package it. But as I say, we've got a fantastic team of people, both at our sales team but also our underwriting teams, who just want to talk to the broker, use that opportunity.
I think the other thing I'd add too is that, you know, when I talk to brokers, one of the things that's really important is, yes, getting the right products and propositions, but there's also the delivery. You need to know that when you promise something to your client, that it will be delivered. And I think what Jeremy is probably, you know, he's too modest to say, but I think in the work you've done in Accord over the last few years, we can give brokers real confidence in delivery. They know if they're coming to us that they can speak to us, they can speak to a real human being. We will make judgments based on individual cases, and we will deliver. And there's a huge focus, not just in Jeremy's team, but at the Exco, in every week looking at the operational metrics to make sure that we've got all the right resources in there, so that when that broker makes a commitment or says, yes, I think you should go with Accord, that actually we will deliver for that broker. And I know that's not to be underestimated.
As a proof point on that, we were just recently talking, so April will be our biggest application month for the last 2 years. So it's been a fantastic April for us. We've had a really strong, but our service turnaround times have actually reduced. So we've had our busiest month for 2 years, and our average turnaround time is 10 days. And it's gone down from 12. So you look at that, and I think that's testament to the quality of people we have in our underwriting team, and the business that's coming through. So that consistency and trust, I think it's just built in there.
And we're continuing to keep looking for those marginal gains all the time, to try and shave a few hours here, you know, a day there off our processes, so that we can help the broker by delivering something even better.
So that's the broker using you more often now and understanding what you want as well, I guess.
Yeah.
Okay, so just a couple of final questions, one for each of you. If we look at maybe the wider societal challenges, issues that are out there, and I'll start with you, Susan, on that. So how does Accord, or the society as a whole, sort of ensure equality and equity within its business and also within the market it serves? Because it's key aspect everywhere, isn't it, at the moment?
Yeah, absolutely. Well, actually, I'm pleased you say that it's a key aspect everywhere, because I think what we have seen in the last few months is a little bit of stepping back from some people. So just to be really clear, for me, for YBS, for Accord, we're definitely not stepping back. In fact, we talk about how now's the time we need to step forward. We all firmly believe that diverse, equitable and inclusive businesses are better businesses, and I certainly want to lead good business. So we have, across Yorkshire Building Society, for our colleagues, we have a series of employee networks. They are colleague-led, but they get great support from central HR team. And we are also collecting a lot of data to help us to make sure that we're actually seeing the impact of the actions and that we are actually seeing a more diverse organisation as a result. Today we're in a really strong position in terms of gender equality. In fact, our board is 60% female, our senior leadership population is broadly 50, and our pipeline, which is even more important, is also gender balanced. But we've got a lot more work to do on other aspects of diversity. Our colleague base in terms of ethnic diversity is just under 18% from ethnic minority groups. But at our senior leadership level, it's still only at about 7.4, although that is up from about 6.7 at the end of last year. So we have got a lot more work to do. We think it's really important work, not just for our colleagues, but we want to make sure that we're representing society at large, and that any customer, whatever their background, whatever their history, can feel that we will welcome them as an individual into Accord and Yorkshire Building Society. So we're working really hard to drive diversity, equity and inclusion inside the society, and also to make a difference where we can outside, and to be really clear that we stand for good businesses. Another thing that we're caring an awful lot about and paying a lot of attention to in our heartland in Bradford is socioeconomic diversity. We actually have quite good socioeconomic diversity at senior levels, but we want to make this wonderful industry that provides such amazing opportunities for people, we want to make that open to as many people as possible. So just in Bradford this year, as an example, we are bringing in 1,000 young people from schools, particularly in some of the more challenged areas, to bring them in for a day to meet people within Yorkshire Building Society, to see what happens on their doorstep, and to hopefully help people see what they can aspire to just in their own geography. So we take this very seriously. It's an important part of a good business, and we're going to continue to focus on DE&I across all strands of the agenda.
That's great to hear. And Jeremy, the final question to you, and I seem to give you simple questions with complex answers, so which I'm sure Susan's pleased about. The green agenda, how can you as a lender help the industry? Because a broker have got so many things to think about when they're giving advice, and they're sat in the middle, and you talk to them about the green and just go, oh, something else. Where are we going to fit that in? So,
I mean, you're right, it's a huge topic, and it's one that everybody knows needs tackling. There is an absolute desire, I think, across every industry to improve our green credentials, but that's really easy to say. The hardest thing is to deliver off the back of that, and I think lenders are grappling all with the same question: is how do you put products out there which are meaningful, which make a difference, and that aren't just greenwashing. So, you know, giving a 10 basis point discount for something is not really helping. So we need to get much more into the detail and think more deeply about what those solutions are. I think in the meantime, there are a number of initiatives out there that we can all get involved with, and I think the first thing is that it's just around education. You know, let's all learn more about the topic. Let's learn more about what's out there and what there is to support. And I think there's some real basics that, you know, brokers can do with clients that we can do in our own lives, which come down to, you know, how we insulate, how we get the real basics right, how we reduce our energy bills, how we reduce our consumption, and that makes a difference. Whether it is then getting as far as installing heat pumps to your home, you know, there's a lot more than we need to unpack in terms of retrofitting homes and how that works across the wider UK, which will need government support. So I think education is really important. Support for the broker to get those messages across, and there's some great work being done by the Green Mortgage Advice initiative, which is supported by the Association of Mortgage Intermediaries, and that's help for brokers, and the Green Finance Institute are doing some great work as well. So I think there's much more awareness. There's lots of stuff on the growth series, which we've talked about before, and we've recently just set up a partnership with Snug, which again gives education and support, and there's details of that on our website. So big topic, long answer if you really want it, but I think the main thing is education, and then how the industry reacts to particularly things like the big topics like retrofitting, which is the challenge we've all got to come to terms with.
I would say I think that the Snug, if brokers haven't tried it themselves, I'd encourage people to go onto the website, go through, put your own property in. I think when you work through it and you see the recommendations that come back, I think it's a great thing for you to be talking to your customers about, because it's a new tool, it's simple and straightforward, and it could really help.
Brilliant. Thank you both for your time today. We've covered a wide variety of topics and you've been very open and honest, and thank you for your support of the industry, and hopefully we'll catch up again soon.
Thank you.
And to everybody else, thank you for watching today, and keep your eyes peeled for future interviews over the next few months. Goodbye.